This is Rebecca with the Cat and Rebecca Show, Keep It Real Estate. And today we have Jennifer Underwood with Corner Escrow, and we want to talk about some of the buyer's costs that they'll see on their sheet coming from escrow. One of the things that I always get questioned on is on a contract, it shows that the title policy for clear title going over from the seller to the buyer is paid by the seller. So then when there are title fees on a buyer's net sheet, they're always curious where those title fees, what they are and how they're derived.
So the buyers end up getting a title policy charge if they are purchasing a home and they can't afford to buy it with cash. Then they have to go to a bank and borrow money. So the bank, being the lender, wants to have their loan insured as well. So then they require a loan policy from title, which is in addition and separate from the owner's policy that we see referenced on the contract for the seller to pay. So that's how we get the loan policy, is because their lender that they're borrowing money from to buy the home is requiring that additional insurance.
Now, are those fees based on title or the lender? So is there any adjustment in that when you get the cost?
The loan policy is based on the loan amount, so however much their money they're borrowing. If they're doing maybe an FHA loan, then you're borrowing a higher amount of what that sale price is, versus if you are only taking, say, a $100,000 loan out for a $400,000 home, then your loan policy is going to be less because the liability is a lower amount.
So no, that's not something that can be negotiated because it's just a fee in having that insurance on that mortgage.
Correct.
Okay, and then I guess the other biggest question is impounds, and especially for those first-time home buyers when they see those impound costs.
Yes, so simplified, an impound account is when a portion of your mortgage payment goes to pay property taxes and your homeowner's insurance, or fire insurance as it might also be known as. So VA loans and FHA loans require there to be an impound account. Conventional loans, it's optional, so some people like to have it, some people want to pay it on their own. The nice thing is you pay that money every month, and it's broken down into a 12-month increments, so you don't have to save the money through the year. And then your lender takes care of dispersing the money to taxes and to your insurance when the bill becomes due. The other nice part of this is that first half taxes for California are always due right before Christmas, and second half taxes become due right after Christmas. And so that's the most unfortunate time of the year for us, because that's when we are in present mode and buying our gifts for family and friends, and so we always tend to have depleted accounts at that time of year. So we don't have to worry about being disciplined through the year to set that money aside. We just pay it every month to the lender, and then we let them take care of that.
And does it make a difference on the timing of when a close of escrow is, what those impounds could look like?
Absolutely. More for on a purchase, more for the taxes, because the taxes, the bills don't come out until fall. Then the first half's due in November, second half is due in the spring. And so depending on what time of year, if you're buying in the summertime, we may be into next year's fiscal tax period, but the bills may not be out yet. So it's always an ever-evolving and changing number of months that they're impounding for, just depending on what time of the year it is.
So now the lender usually does kind of estimate with a purchase price what those types of impounds are prior to an opening of escrow, so that you should have that information from a lender.
Yes, and really it's more based not on the loan amount, but on what the property taxes for that property are. And then they need to get a quote from their insurance company, because insurance can be $700 a year, insurance can be $1,800 a year. And so it really depends, on how big that impound account's going to be and what that monthly breakdown ends up being, based on what the fire insurance is and then the property taxes for that subject property.
So those are going to be your biggest costs with escrow, and what those kind of look like. Now, if you have any other further questions, if we didn't cover it enough, or there's something else that you'd like, please click on the link with your questions and comments, and that might be our next show. Keep It Real Estate.